Today's event is proudly sponsored by Westpac. We could not do this without the support of our sponsors, especially in these challenging times. So we want to say a very big thank you to Westpac. They do amazing work to support the mature market and have a lot of customers over the age of 60. And they're doing more at this time than ever to ensure everyone has the stability they need to get through this. So we encourage you to check out all of their services and products and be as grateful as we are for the support to do what we do for you today. Now, before I introduce today's panel and we kick things off, I wanted to let you know how the session will run. We start with about 20 minutes of prepared questions from me, followed by conversation that will be interspersed from you. So our team is sitting there in the Q&A area, taking your questions and putting them into a live sheet where I can see them and put them into the order of discussion that we've organised for you today. We will not be taking questions from the chat room, only those submitted via Q&A, and that function is at the bottom of your screen. Thanks to everyone who submitted questions during the registration. We've tried to integrate these into my questions. So now I'm going to stop my slides and it's time to meet our panel today. So you should be able to see 4 of us on your screen, and we're all doing this from home. Everybody on the panel has come to us from their home offices this morning. So give us a wave, everyone. I'm going to introduce you one by one. So our panel, Noel Whittaker, the veteran financial commentator and author of 22 books, the most recognised of which I think is Making Money Made Simple. Give us a wave, Noel. You're off mute now. So we have Rob Lockhart from Westpac's Davidson Institute. He's a financial educator, and Rob has a lot of insight into what's going on. So I'm really looking forward to how each of these gentlemen are going to interact today with each other, because I think they're going to have a lot of things to discuss. And Nick Bruining, who has joined us from Western Australia.
Morning, everyone. Yeah, I'm used to getting up at this time of day. I've been watching the closing of the Dow every night. So, yeah, I'm just about ready for lunch.
So Nick is an independent financial planner and one of only 200 of those in the country, which is an important thing to say in this market. And he's a finance expert on the TV, has written a book which is widely promoted, which is Don't Panic and Why You Don't Need $1 Million to Retire Well. And yeah, please feel sympathy for Nick over there in Western Australia and for all of the rest of you who got out of bed at such an early hour over in Western Australia. We appreciate it, and we will be broadcasting on Facebook later on in the day for people who have missed it. So now I want to get started with some of the questions for the day, guys. We have an audience of over 1,000 people online already out there with us right now. So everybody's keen to hear what they came for. So let's start with the basics. This question, I'm going to start, Rob. Plenty of shops and cafes are refusing to accept cash right now. And I guess it's because they're concerned that cash money contains coronavirus. Rob, should we be worried about handling cash in this market?
Thanks, Rebecca. I think what we're seeing a lot here with the cash is actually no more going to give you coronavirus than any other surface that we're touching. So yes, it is a little bit of a concern, but I think the most important thing to remember if you are handling cash is wash your hands regularly, particularly before you're going to eat food, just as you would if you were touching any surface if you're outside your own home. Make sure that you keep that hygiene up to try and stop that spread of the coronavirus. Having said that, though, absolutely right. A lot of cafes and shops are starting to say, hey, we only want you to use the tap and go, the contactless payments. We don't want to accept cash. They're being overly cautious, but the reality is there are now lots of places where people don't want to take your cash. So you need to, if you don't have, if you're still using cash, maybe you've still got a passbook and you take cash out from the bank, you might want to consider getting a debit card or a credit card, depending on your circumstances, so that you too can make contactless payments. And you may even want to start thinking about getting online as well, because if you're online, then you can make some of your payments over the internet with your online banking rather than having to go out and use your cash.
Yeah, I mean, I got turned down the other day at my local cafe on my morning walk. They said, no, we won't take your $10 note for a loaf of bread. And that was the first moment that I sort of felt that real shock. I mean, how many people actually operate off a passbook still in Australian society? Do you know the numbers?
I don't know them off the top of my head, but it's still quite, there's at least a couple of 100,000 people out there still using passbooks at our branches. And I understand why people use those things, but I think now with the way we're all operating, people should consider not just having the passbook, but maybe getting a debit card from the bank. Don't have to go credit, but get a debit card from the bank and maybe go online just to give yourself the options so that you can get out there and be able to transact in the environment we're in today.
Rob, contactless payments is something everybody's really, and you've just been talking about them. Do I need a smartphone to do contactless payments?
Rebecca, there's lots of people are a bit confused about that. You don't need a smartphone. You can use a smartphone, of course, but contactless payments are basically, if you go into a store, you'll see them with their little FPOS terminals, little terminals that people can tap their debit card or their credit card against. But the great thing with how technology is moving, if you don't want to carry a debit and credit card with you, or you can actually have it loaded onto your phone, so you can use it that way as well. There are other technologies. Westpac has a thing called Payware, where you can get a bracelet with that contactless payment technology in it, or it can be a little brooch or something like that you can carry with you, so that you can tap them on these terminals and make those payments without having to physically touch cash, get change. And most people find that very simple and easy to use. Contactless technology, particularly in Australia, has been booming just because people find it so simple and easy to use.
I think it's Nick, how many people do you think are going to be forced into this way of doing things over the coming weeks? I mean, there's talk we might not have as much to non-contactless payments.
So I'm going to say it's going to be very interesting, because as we go into more and more lockdown laws, there's going to be less and less places open, and the places that are open, if they're not accepting cash, you're stuck if you don't have another way to make a payment. And that can be simple things, as you said, going out and getting bread. If I can't pay for it, I cannot take bread home. So I need to be able to do that. Having said that, you could also maybe get online, because a lot of the supermarkets have online shopping, and they will deliver your food to you if that's a better option for you.
There's some limitations about delivery at the moment that are hopefully going to be overcome in coming weeks. I understand a lot of the supermarkets aren't able to deliver at the moment, and it's challenging. But I know there's a neighbour around the corner in my neighbourhood with a whiteboard out the front saying, "Can I help people? Would you show me, tell me, and I'll write your name on the board, and I'll come and get the shopping for you." I mean, it's beautiful to see society popping up this way, isn't it?
I think it's one of the wonderful things about human beings, Australians, is we are willing to get out there and help each other. These things do happen, and it's always changing what's happening, and we've got to be very flexible and help where we can.
Rob, Nick, Noel, I'll throw it out to all of you. Do you use contactless payments? Yeah.
I only use contactless payments. I don't carry cash. There's no need to.
Yeah, right.
I'm the same. I sort of drag the card out and wave it around, and suddenly they've taken my money. How good is that? But I think the other point to make is that sometimes one of the good things is that once you get over a certain limit, there's a bit of a protection thing, I think, where it actually asks for your PIN number. So that that's a good sort of feeling behind it, knowing that they can't clean me out.
Yeah.
Thanks for that, Nick. You're absolutely right. So a contactless payment is only up to $100. If it gets over $100, you've got to put that PIN number in, and that is to protect you. So if you lose your card or your phone, if somebody goes to use it, they can't buy anything over $100 at a time. which means you're not going to lose as much money. Having said that, the banks will also look at the circumstances and maybe even help refund some of that money for you if that does happen.
Oh, that's good to hear.
It's also good too, because if you've got the app on the phone, you keep a running balance. So you always know how much you've got left if you use a card like that, which is great.
Well, I mean, that's the next question. Do you use internet banking? And I'm assuming each of you use internet banking?
Wouldn't do anything else. What else can you do?
A lot of people still aren't adopting it yet. And I think this is the window, I'll be very honest, where there's not going to be a possibility to deny ourselves that need. The tools of internet banking are just amazing, but it is amazing how many people in over 60s particularly haven't adopted it yet or have been resistant to adopting it.
I think we see that in a whole lot of things, Rebecca, that people that are of that generation have always been a bit wary of computers and anything to do with online, and you often find that the same people that don't like, online banking are also the people that unfortunately don't do their Centrelink interactions online, and unfortunately these days you do tend to miss out a bit because a lot of that stuff is only online. And I remember talking to a lady who was whinging about the fact that she never gets any travel bargains anymore because it used to be in the paper. And of course, they're not in there. You've got to be online to get them. So there's many other things, and it's just part of it.
Nick?
Sorry?
You have to send it to travel@60.com.
Every old member in my golf club does all their golf bookings online. It's quite normal.
Oh, and it is, but we're in an unprecedented time, and I think for us, there's a lot of conversations to have about how we use the internet through this phase, and it's one of the big needs I believe everybody has in contactless payments, and using all the devices at our disposal through this period. If you haven't got it set up yet, what can you do, Rob, to do that quickly? Is there a need to move fast?
I'm going to say the sooner you get on, the faster you'll find how simple it actually is to use. Yes, it's a little bit scary and you just got to learn a couple of little things to get online, but they're actually simple. And at Westpac, to get online, if you go to, in fact, we've set up a COVID-19 page, which has a link straight to setting up your online banking. There's other ways to get to that, but it takes you through the whole process. We have videos, we have guides, just to help make it as simple as possible. And pretty much to get onto online banking, all you really need is either your customer ID number or one of your cards, if you have a card, or even your bank statement. If you've got that, you have enough information to get on and set up online banking. Having said that, you still can go to a branch, and a branch will help you get onto online banking. You can ring up our customer care centre. They will help you get onto online banking. But I do have to just say, with regard to our branches and our call centres at the moment, because of COVID-19, we've got an extraordinary number of people coming to the branch and going onto the telephone. So there is a wait, right? So you can go there and they will really help you do that. Be prepared to wait if you're going to use a branch or go onto the telephone. Online is a lot simpler and can get you up and running.
Well, that's great, and that gets you into online banking. What if I want to sign up for? For me, I haven't used Apple Pay or any of the payment systems on my phone, and I know.
Yeah.
I have an iWatch. I have a phone. I'm just resisting, right? I'm just sitting there going, I can tap my card. But there's a point here where my kids use it, right? And they sort of go na with their debit card, and they don't have credit. There's a point here where we can move that way, and if we're going to be in the COVID environment, and I'll be blunt, the advice I'm getting from smart, undramatic sources is saying 13 to 18 weeks of is not dramatising what over 60s will be exposed to being indoors for and being limited in our transacting ability.
Yeah.
That sensibility says we don't want to be getting more contact with the outside world than necessary during that time. Can I set up contactless payments the same way?
Yeah, so once you're online, basically to get contactless payments, as you've got a debit or credit card, you can use contactless payments. But you're right, you can get your banking onto your phone now. You just need to go to the Apple Store or the Google App Store and download the Westpac banking app to get on. Once you're in there, you can set it up to do contactless payments with your phone as well. Again, there's instructions about how to do that and make it as easy as possible. But I know I've got it on my phone. I use my phone all the time to, I'm not actually using it for contactless payments yet, but I'm using my phone to check my account balances, to actually have a look at my transactions. Even I can make payments to other people over my phone or transfer money from one account into another account. So I can do that online. I can do it on my phone. I can do it 24 hours a day. It just makes my banking life a lot easier to be online and also have it on my phone.
And it's not just Westpac. I mean, for everybody out there, Westpac are the sponsor today, but they want the message out there for everybody banking right now. If you are unable to walk into a branch in 3 weeks' time, and we don't know what's going to happen in this world, that getting these things set up for both yourself and your parents has never been more important. And there's plenty of 6-year-olds that are very digitally savvy in our community. They've found their way onto Zoom. They're all watching us out there. But also worry for your parents. And that's something we're going to talk a bit more about today. So now I'm going to jump on. Noel, you're a pretty regular traveller to Europe and the US.
Used to be, not anymore.
Yes. As a travel lover, I'm heartbroken at the moment.
Yes.
But we can love travel and it will come back, right?
Yes.
So you've watched their financial systems for a long time. We know that in some European country, bank branches have shut completely or reduced their opening hours to help reduce the spread of COVID-19, or simply because they don't have enough staff to keep them open. Surely having an online account in case that happens in Australia is a good insurance policy.
I would think it's very important. I think it's very possible that some bank branches will shut. Absolutely. Also, if you aren't tech savvy, everybody older should have an enduring power of attorney. If they can't do it, their power of attorney can teach them and can help them. Yeah. Certainly, there will be a time, I think, in the next 6 or 8 weeks, that there won't be bank branches open. Only because of the staff, that's it.
Yeah.
Banks will be there. Oh, yeah.
Worry for everyone, isn't it?
Be prepared, that's my message. Be prepared.
Aside from being able to use contactless payments, and this question's to all three of you, but we haven't got Nick talking too much yet, so we might start with him. Does anyone have any other good reasons for online banking? Is there other things you're using it for that we might not have talked about?
Well, if you live the hours I do, then my bank's not open at 11 o'clock at night when I'm able to sort things out. So I think it's the convenience of it, really, as much as anything. Just the fact that you can get up at any time, pretty much, and sort things out and slide in back to bed.
Talking about security, Rob, you talked a little bit about the $100 limits. Is there other things that are in place for security once we're in the digital environment that protect us?
So, Rebecca, once you're in that digital environment, Westpac has a number of guarantees that we will keep all your stuff secure. Fraud guarantees, so if you are scammed using your credit card or debit card, we will give your money back if we can prove that happens, of course. Other things that you really need to be careful of, though, with regard to security, you have a password to get into your online banking. That password is just so important. Make sure your password, you don't share it with anyone, right? If you share it with somebody, then if it gets out to someone else or you write it down and somebody else gets it, they can get into your accounts and transact on it. So your password's really important. So make your password something that people can guess. So don't make it your birthday, don't make it password or 1, 2, 3, 4, 5, 6 or something like that. Think of something that means something to you, but nobody else would realize that. Make sure you use capital letters, numbers, other characters on your keyboard within that password, so it makes it harder for people to work out what it is. So that password side of it's really important. Also, from a security point of view, and Westpac has a whole page on what to watch out for scams and frauds and those types of things. Also, the government has its Scam Watch site that you can go and have a look at scams. So this is really about being careful of people who ring you up on the telephone, and ask you to, look at your computer or things like that. If you don't know who they are, you've not asked them to call you, probably best just to hang up on them. They can get very angry and irate to you and that type of thing. Hang up on them. Report them through to the government Scam Watch if you like. If you get an email which says, click on here to go into your bank account, never do it. Westpac, and I gather all the other banks, will never send you an email to directly send you to log into your account. The reason we do that is, when you go into your banking, we want you to actually open up your browser for the internet and type in, if it's Westpac, westpac.com.au into the browser and go in that way. There are too many people who set up other sites that look like ours, right? And they'll direct you straight from an email or maybe straight from a message on your phone to those sites. And then all they do is they gather all your information as you're typing it in. So be very careful. So I'd always say, go directly to the site, type it in yourself. If you get an email which says, click on here, you don't know who it's from, or even if it says it's from Westpac or your telephone company or the Australian Tax Office or whatever, really have a big think before you click on these things and put in any personal information, particularly passwords, your birth date, those types of things, because these could be trying to get that information to get into your accounts. Having said that, holding cash, I think is actually less secure than going online. Cash, we can lose it. Cash can get stolen. It can get destroyed. Online, those things, it can, as I said, if somebody gets your password, get in there. But other than that, they can't see it. Also, all your transactions, you have transaction records that banks can track through for you, which is different to cash. So the bank is always looking out to secure your money and make sure you feel safe banking with us. So we do everything we can to make that happen.
Look, and that's really important because there is already people talking about coronavirus scams. So now I'm going to move us on from the cashless discussions into deposit rates. Nick, we have had some big changes in deposit rates over the last couple of weeks. Do you think we've got a one-off thing going on here where the banks are raising their cash deposit rates, or do you think this is something that's going to keep continuing?
Well, look, there's no question that many of our viewers are dependent on term deposit rates, and they've just seen them slide. Remember the days when they were 6%, and they've dribbled down, and up until sort of a month ago, you were lucky to get 1.2. So part of the government's economic stimulus is to try and get those rates up a little bit to give depositors more money to spend, quite simply. One of the other things that's happened too is a lowering of the deeming rates. Now, there used to be a time when all of the banks had bank accounts that were directly linked to the deeming rates, and about 4 or 5 years ago we saw that linkage break. Now the deeming rates are the rates that Centrelink use in calculating your pension under a thing called the income test. So while they're down, they've come up a little bit now. Obviously they've got a long way to go to sort of get back to the days where you could actually survive off a term deposit. So it's a good sign. I think it's probably a bit of a short-term thing to get us over the next 6 months or so. The fact is that they will probably keep interest rates low. There's a bit of an argument out there in the financial world that interest rates have been too low for too long, and in fact that might have fueled some of the share market bubble that we've just lived through. So I think it's a bit too early to see how long it will go for, but certainly you make hay while the sun shines and sort of get those decent term deposits while you can.
And I've got a question for Noel now that people are asking, and I think it's important to know the answer to. Do you see your bank accounts and term deposits remaining accessible during this time? And can a government or a bank actually stop customers from withdrawing their money? If
I can just go back to the deeming rates, the deeming rates have changed twice in a month. The new rates don't start till the 1st of May. but there was a big pension increase on the 20th of March. So pensioners have already had an increase in their pension, which also makes some people eligible that wouldn't be eligible previously because the asset test threshold has risen.
Yeah.
And the deeming rates are changing on the 1st of May.
That's great. And we've had 2 changes to that this month. While we've got you on pension, Nick, you know the pension system like the back of your hand. And I'll come back to that question, Noel, on bank accounts and accessibility, because it is one that the community keeps asking us.
Yeah, but I'll say something. I mean, it's not going to happen. I mean, what may happen is that bank branches will close because of staffing and government laws, but all our banks are safe.
That's good to hear. And I think that calms everybody down. Nick, you know that pension system like the back of your hand. So what special assistance is being offered to pensioners during this period? And will pensioners get some of that money?
Yeah, well, one of the big things that came out quite early in the piece was people that are on a pension as of the 12th of March were receiving a $750 economic boost, if you like. That actually starts rolling from the 31st of March. So over the next couple of weeks, expect $750. The important thing is it's per pensioner. So if you've got 2 pensions in the household, you can expect a cheque for or a deposit of $1,500. Similarly, people that are on a part pension, you get the whole $750. So if you're only getting, half of the pension, you're going to get the full $750. One of the really important points, sort of coming off the back of what Noel was to say, we're finding that a lot of people, particularly with account-based pensions, have values in the system as far as Centrelink's concerned that reflect the values around about February when the markets were much, much higher. So it's really important that if you've got online access, and hopefully most of our viewers do, to check your MyGov records to see what values they've attached to your account-based pensions, because we've seen some huge differences between what they're using in their systems and what they are actually worth now. So that's a really important tip for people watching, just to check that the values Centrelink are using are entirely accurate. In my experience, virtually none of them are.
Have the rules around superannuation, such as minimum drawdowns, changed in the last period, Nick?
They have. So there's a couple of things with respect to superannuation. There's the very popular, you can get your hands on $10,000. I mean, that's a topic for another day. It's very dangerous if you're a young person ripping that sort of money out because you lose the compounding effects. But for people that are in retirement, we're in a situation where you might have an account-based pension where you need to draw out the minimum statutory amount. So anyone, for example, over 65 needs to be taking out 5%. It goes up as you get older. So what the government's done is exactly what they did in the global financial crisis. They've said from here on in, you don't only need to take out half of that minimum amount. So if you're taking out 5%, you can drop it down to 2.5%. Now, that's not to say that you should do it. If you've got your account-based pension set up properly, you've built it for these sorts of events. You might have a decent amount in cash and you're drawing your pension payments from cash. It's a case of making sure that you've got enough coming in to pay the bills. But let's be honest, a lot of the things that we might have spent our money on, we can't. You can't go to the pub, you can't go to the movies, you can't go to the coffee shop. So now might be a time that you can actually drop it down a little bit and then sort of build up some demand, if you like, for when we're through this on the other side, and you take out a little bit more to head back to the coffee shop.
You mentioned the hardship provision where people can withdraw $10,000 in emergency funds from their super. How do people do this, and would you recommend it? As I was saying, I think if you're in a situation where you're desperate for cash, you've got sort of people knocking on the door or ringing up rather than knocking on the door these days, then yes, by all means, look at taking some money out of super for those reasons. But there's a group of people that sort of have this inherent mistrust of super. They want to get it out as quick as they can. They'll be queuing up at the doors to sort of get their dough out. But like I say, it's one of those things that particularly once you're in retirement, taking money out from super might be easy. Once you're over 60, it's going to be tax-free anyway, so none of those benefits are there. Remember that if you're over 65, getting it into super, if you decide to put it back in, there's a whole lot of rules that you need to comply with. So be very careful about just ripping it out for the sake of it. If there's a real need for it, by all means, but to have it in a bank account when you can't put it back in, I don't think that's a very smart move. Yeah,
I agree.
Noel,
Yeah.
Some readers are wondering whether or not to start drawing down an income from their super, but they don't know whether they should put it off at the moment, and just live off their savings. Where do you sit on that type of decision making as people were looking at retirement all of a sudden having their opportunities change?
Okay, you need to be a certain age to draw down your super. That's the first thing. And secondly, once you start to draw down, your super fund becomes a tax-free fund, and you draw a tax-free income from it. So for most people, they're better off to start drawing a pension when they can, then their fund becomes a tax-free fund. If you've got a heap of assets outside super, you could be better to leave it in the accumulation phase and pay the tax for 15% on that.
Some readers are asking about entirely self-funded retirees as well. What help
Whatever
is there?
that means, well, it's a subjective thing, isn't it? But that's people with assets over 875,000 probably. And I think one of the main things for them is, well, certainly if you're on a part pension, make sure your will is in such a state that if you die, what's left to your partner doesn't take them over the limit and they lose the pension as well as you. Because the cut-off point for a single is much less than a cut-off for a couple. So I think in these days, estate planning is more important than ever. Sorry, Nick.
No, I was just going to, I'm sorry, Noel, I didn't mean to jump in. I was going to add, for the people that are entirely self-funded, they often don't go near Centrelink and don't understand that there might be something that they can tap into. One of the really important cards to know about is the Commonwealth Seniors Health Card. Now, that's a card that's not tested by assets. So it's almost one of those that if you don't get a pension, well, you can get this thing. The cut-off for that is 89,290 if you're a couple, so that's the combined amount. And that's a special sort of income, taxable income essentially. But let's not forget that money that you're taking out of your account-based pension or super isn't taxed, so it's exempt. There's a lot of people drawing money from an account-based pension, $89,290 and $55,800 if you're single, and you'll get this Commonwealth Seniors Health Card. Now that gets you your pills for $6.60 a script, capped at about $314 a year, but importantly, the $750 bonus is also paid to people that hold the card. So if you've got the Commonwealth Seniors Health Card, you had it on the 12th of March, you are going to get your $750. And the second lot that comes through in July, if you get into Centrelink now and claim that Commonwealth Seniors Health Card, you'll pick up that second lot of $750.
Now, bear in mind, Centrelink is saying don't come to their offices.
Oh, yeah, good point. You can do all online.
All online again, that's right, all online. Yeah. But there's also, if I can say something here, if you're a small business, and you employ one person, it could be your partner, you get a $10,000 bonus before June 30th and a $10,000 bonus after June 30th. And that hasn't been publicised at all.
Goodness, that's another helpful piece of information.
Yeah, there is.
And just on the Centrelink, for everyone that hasn't gone near them, you actually access it through the MyGov website. So you need to set up a MyGov account. Unfortunately, you do have to contact Centrelink to get a thing called a linking code. And the linking code will allow you to attach Centrelink to your MyGov portal. And once you've got Centrelink hooked up, then you can lodge everything. Then you can lodge the pension claims, the Commonwealth Seniors Health Card, you can update the records. And as I was saying before, if the balances aren't quite right, you know, that you've got actually less now because the asset values have dropped, you can update that through MyGov as well.
Well, that's a really important one that I actually jumped over before. People are asking if the asset values have changed significantly, whether they should be thinking about going in and registering for the pension.
I would be joining the queue to check that. As Noel was saying before, you know, if you're a homeowner coming in under $869,000 as a couple, you're in the system. You should be claiming a pension.
Wow.
Yeah. Most definitely. Yeah.
The single's about 550 from memory, isn't it? About 5.
Yeah, 578. Just on those values, a lot of people also look at sort of, they've got, you know, I've got the Flash Toyota out in the driveway, and I've got the Swarovski collection in my home. Understand that Centrelink will actually accept the scrap value of these things. So if you called in someone like Cash Converters or a pawn shop and said, "What's my house worth?" Sadly, they'll say, "I will give you $10,000 for it." That's the value you use. In 1982 Corolla, you might have it insured for $20,000 because it's a fantastic little car. But if you look at what its scrap value is, it's probably $500. That's what you put it in. Equally, understand that Centrelink don't depreciate things. So the car that you told them about a year ago that you paid $100,000, it's depreciated by 20%. get in there and get the depreciated value attached to your records, not the purchase price that you paid for it.
Oh, Nick, thank you for coming. That was really
That's a great point. That's a great point.
Everybody will benefit from this type of information, guys. I've got a hypothetical question, and I know you can't offer personal advice, and you're all very experienced in that. But just for general guidance, what should people do with their super right now if they've got a balanced investment option? Should they be trying to move as quickly as they can into cash, or should they sit tight and hope stock markets recover? And what are the issues they should consider before they make a decision? We're getting asked this every day by emails to our Money Club.
Can I say something?
This is to throw out to all three of you. I want each of you to answer.
Okay, well, first of all, it's too late to move to cash anyway. And secondary, history tells us nobody can time the market. Now, the market will be up today, so we've had 4 days straight up. Trying to time the market's a fool's game. If your fund is a balanced, funds will be spread across cash, property, shares, international shares, local shares. Just leave it alone. Because if you're 60, 65, you've got 30 years to live. As long as you've got 3 or 4 years in cash investments, which includes your pension, 3 or 4 years spending, leave it be.
That's wonderful. Got something to add?
Absolutely agree. And look, Noel's spot on. It is too late to move. And look, one of the things about this period is that the volatility is absolutely extraordinary. A couple of Fridays ago, the market opened up -8%. And I thought, oh my goodness, here we go, Armageddon. By the end of the day, it was +4. It was a trading range of 12% in one day. So if you think you can pick where it's going to go from one day to the next, good luck to you. Putting this in a bit of perspective, folks, when the global financial crisis hit, our market was around about 6,800 on the All Ordinaries Index. It came down to about 3,100. That was a 54% drop, but over an extended period of time. What we've just been through from the market of 7,200 down to about 4,600 or thereabout is a drop of about 37%. It's absolutely ugly, but in terms of magnitude, we've got a long way to go to get to the global financial crisis. And the point is, look what happened after that. Up it roared, 57% in a couple of months. Now, I'll tell you what, the other thing that happens, people switch to cash and think, oh goodness, thank God, nothing's going to happen, I'm safe. And then they see the market creep up a bit, 6%. Then it goes up 10%, 15%. Then they think, oh, I'm missing out here. And of course, the thing that gives them confidence to get back in is what they've just missed out on. They've been parked in cash.
That's spot on.
You've just got to be, got to ride it through. I know I'm hogging it, but mate, sorry, Rob, I'll let you say something.
That's okay, Nick. I'm going to say I agree with Noel. You've said the various things. But I always look at it and go, when you chose that balanced fund, that was your strategy. Part of that strategy was dealing with the ups and downs that happen in the market. So stick with your strategy. Right, your strategy will work for you in the long run. So don't try and second guess what's happening in the market. Stick with your strategy.
Can I ask then, as a follow-on question, how do you know when to move back into equities?
You don't know. That's the whole point. Nobody knows when. And most people who try, as Nick just said and Rob just said, then they miss out. They don't get back in until it's too late to get back in.
Yeah.
So, can I just add one thing about people's misunderstanding of super? They see it as an investment. What a lot of us don't realise is how it kind of works. And quite simply, it's a box that holds real assets, real investments. It's not the super fund that's going up and down. It's the investments inside your super fund that are going up and down. So when you hear someone talking about shares, understand that these are real companies with real assets behind them. Just because the share market's dropped, BHP hasn't disappeared. They've still got their mines, they've still got their equipment, they've still got their stuff. Woolly hasn't closed up shop. If anything, they're doing very well at the moment. Thank you very much. So understand that your super is invested in real buildings, real assets, not just some nebulous number plucked out of nowhere. And we should have confidence that those quality assets don't disappear. They'll ride through it. Just like your house price might have fallen, it doesn't mean the house is gone. It's still there. And in the future, as things improve, those values will come back up. That's the time to make your changes, when you're in a profit, not when you're staring at a loss.
Yeah, well, I've got a left field one for you on that, guys.
Here we go. Here we go.
Here we go. If you were going to choose a short-term investment right now, what would you go for?
Well, it's got to be cash. You can't be in growth under a 5-year period. There is no other investment than cash. It's that simple. There's nothing else.
How do you feel,
And
Rob?
the other alternative is go down to the casino because it's just about the same doing anything else.
You can move 14% in a day. I mean, seriously.
I've got some friends last week who'd sold last year who'd sold their house and having a house built. And they'd seen big ads in the papers for certain people. What did I said? Leave it in the bank, right? Leave it in the bank. You've got certainty.
Yeah, okay.
They were very grateful.
How do you feel about that, Nick?
Oh, couldn't agree more. You've got the
Would you invest short term?
Well, no, yeah, but you've done it. Also, understand if you're really scared, you've got the finance compensation scheme, which guarantees $250,000 for every account holder of every institution. So, you know, if you like, you've got the government backing up all of those bank accounts. I just might add one other thing, which is the story of gold this time round.
Don't talk about gold. Don't talk about gold.
You know, that's always seen as the safe asset that if we, in times of great turmoil, you'll always be safe with gold. Now, you would have expected that with a, you know, global crisis through the COVID-19 virus, that gold would have gone through the roof. It's gone down. It's just extraordinary. So a lot of people are sort of gambled on gold going north, but sadly it hasn't.
Well, you could do gold or pork bellies or silver, platinum. It's a bigger field investment. You only buy in the hope that a bigger field will buy from you. Right.
All right. I'm just going to, I love your conversation. I'm just going to add one thing. If I had extra cash sitting around to invest, I would pay off my debts. If I've got any debts, I'm going to get the best return paying them off than I am anywhere else, and it's safe.
Unless they're investment debts.
And I'm going to stay in cash.
Yeah.
Sorry, Noel.
Unless they're investment debts, because you don't want to lose your negative gearing.
No, you're right.
Absolutely.
So I've got two questions coming in from the community, and I want to hear it from each one of you, even if you agree. Is the general feeling to sit tight in your current super investment option?
Well, if it suits your risk profile, I mean, it's a bit late to think of that now. As long as you've got that cash cushion, yes.
Yeah, and look, and Noel's right. And one of the things that is to understand the time frame of different investments. So if you came to me and said, "Oh, look, Nick, I think I'm buying a car in 18 months' time. What's a good investment for for that $30,000 I've set aside?" Put it in the bank. Why? Because you want that $30,000 in 18 months' time. You want to know it's actually going to be there. But I'd argue that the car that you're going to buy in 5 years' time, if you look at the statistics and the probability of different outcomes, then there's absolutely nothing wrong having some of that money in more risky asset classes like shares and these fixed interest investments we call bonds, because there's a very high probability that that money will do better than being parked in a bank account. So that's what we talk about, segregating your investments to the time frame that you're looking at. Short term, cash, no question. Medium term, 2 to 5 years, you can start to introduce things like fixed interest bonds and stuff and shares. But absolutely, for the 5 year plus horizon, no problem with shares and things like that. The trick is that when the profits return, you regularly skim the profits. That's the trick. Take the profit there, and when we've got a crappy period of time where we're at the moment, leave the stuff alone.
Yeah. And when people say I've lost money, it's only a loss on paper. You don't make a loss until you sell. It's very important.
How do you feel, Rob?
Totally agree. The only reason I would change is if my total strategy is right. I have to reassess the strategy of what I'm doing, as Nick said, for short term, long term, that type of thing. But you're not going to change where you are now if it's just because of reaction to the markets. That's the wrong thing to do.
Mm-hmm. Well, that's very helpful. I know I'm getting lots of thumbs up in the chat rooms from you, giving people that sense of confidence.
How thumbs are they, Rebecca? I'm just making sure.
I have a couple of questions about property now, and I'm going to start with buying and selling property. I know none of you are particularly focused on the property market, but you're all experienced in financial planning matters. So I'll throw it at you anyway. Some readers are wondering whether now is a good time to buy or sell property, or should they sit tight and wait out unusual circumstances? We've seen auctions cancelled, but I mean, that's not a signifier of the property market itself. What do you think?
If I could say something, there is no such thing as the property market. There are hundreds of different property markets. This would be a great time to buy and a very bad time to sell. Because a lot of people now can't afford a house. You can bet your boots the banks will be tougher on loan applications. To me, it's a great time to buy if you find the right property. And the key to property is you buy well and you add value. So don't buy an apartment in any circumstances.
No, sorry, no, I'll let you finish.
No, go on, that's fine.
Look, again, I absolutely agree with Noel. We've got totally different markets across the country. The West Australian market, which is where I'm obviously familiar with, we've had a downturn for a while now. We certainly haven't seen a pickup like they have on the East Coast in the last 6 months or so. I think one of the things to watch for is that there are a lot of people that were employed, relying on negatively geared strategies to sort of, generate their wealth for retirement. The unemployment rate is just going to go absolutely through the roof in the next few months. The banks have got a bit of a moratorium on forcing that out, but let's not forget that even though, and Rob might be able to endorse this, that they're capitalising the interest. It doesn't mean they've stopped the interest charges, it just means it's being added to the loan. So when we come out of this at the other side, there may well be some people that are on the edge already with respect to negative gearing that might unfortunately be forced to liquidate. So I don't know. I think it's one of those things to watch though, how things play out in 6 months or so when we're on the other side of the virus, but some of the economic facts start to come home to roost.
And the major key in real estate is location. That's the major factor. Location and a place you can add value to.
Rob, anything to add?
I agree everything with what Noel and Nick were saying. From the bank's point of view, as Nick said, yes, if you've lost your job because of COVID-19, we will give you a 3-month holiday on paying your mortgage repayments, plus a possible other 3 months if this thing keeps going. What Nick said was, yeah, your interest is still going to be accruing on your loan while that's happening. So while that'll help you out in the short term, it will mean that in the long term, you're going to probably pay more interest on your loan. So the idea there is to help you out just for this period going forward.
Very helpful.
Yeah.
I've got some questions.
With regard to property market and buying and selling, again, this is going to get down to, where you are with your life. If you're buying for a home, then you really need to look at, is your job secure at the moment? Well, you're going to be able to make those repayments coming in. If you're buying for investment purposes, again, if I'm thinking of renting it out, am I going to find tenants? If unemployment gets to 11%, which I think Westpac economists said the other day they expected to get to by the end of June, amazingly, am I going to have tenants who can't pay their rent? Is that going to be an issue? But break it back down. Where am I with my investing? Is this the right time for me? It all gets back to your strategies and where you are, because we can't crystal ball where the market's going to go, where the prices are going to go.
I've got a couple of questions on that, Rob, so I'm going to jump in. The community is asking a lot of questions in the chat room, and thank you, everybody. What we're going to do, because we've only got 5 minutes left today, is I'm going to work with Christine, our head of our Money Club, answer as many of these questions with our guests today and put that into our weekend's newsletter if we manage to get it there by tomorrow, and just give you more answers. So
I'll be working my hours.
We've just been flooded. So thank you very, very much. We'll have another one of these events in a week's time or less. I'm sure we're going to ask you back because there's just been so much interest in this, and it's such a helpful thing for people to get honest, interactive answers. Rob, I want to keep going on that subject. If they're reliant on rent from an investment property they already have for a retirement income and their tenant loses their job and can't pay the rent, what can they do? And can they talk to their bank about a repayment holiday if the property is mortgaged?
Yes, if the property's mortgaged, it's all part of our whole COVID-19 package that we will look at their situation, and if we need to, we'll give them that repayment holiday if it's the right thing for them.
I do have another question. Do we know yet if tenants will have to pay back rent to private landlords? And if I don't receive rent, will I be able to use this as a tax deduction? And will banks reduce interest rates on investment property mortgages. That was a mouthful, sorry, but if you got it all and can answer it, I'll be very appreciative.
You're talking to Rob or me on this one? Sorry?
Sorry?
Oh, is this to me or Rob? Sorry.
I will graciously take answers from all of you on this one.
Well, you can't have rental. I mean, if you got an investment property, on your tax return, there's the rental income and expenses. So you can't have negative rent as the tax deduction. But it'll mean that your income will be less on the property. And if your excess is more than your income, it'll be a tax deduction for the property loss. Yeah. Okay. Can't have rent as a tax deduction.
Watch this space. There's certainly the issue of rents for landlords. We're talking about commercial, but also residential is a key area of interest for the government at the moment. Don't think that the economic packages and stimuli are over. As this thing rolls on, and if things look like getting worse, we may see some relief in other areas. I don't know anything. There's nothing going on in the background that I'm particularly aware of, but I do know this whole rent issue is a big problem. We've had some major retailers in the last 24 hours saying they're not going to pay their rent. So, you know, we'll just see how that plays out over the next few weeks.
Also, if I can say something, if there's overseas owners, there was changes in the tax rules which changed the capital gains tax. And people are now asking if I can't sell by 30th of June, because I can't sell it because there's not even auctions. What will the government do? So I've been in touch with the government, asked them to look at that. I think it's very important. That's really it's only for people with overseas investment properties.
So I'm going to wrap up today with one question for each of you to answer. And that is, if you need to do something in the next week, if over 60s need to do something in the next week, to prepare themselves, what should they do? And then what one thing should they be thinking about every time their finances hit their worry list? What should they remember? Leave 2 thoughts with people each today, guys.
First,
1 week and medium term, what's going on?
Get your estate planning in order. Make sure there's a will, an enduring power of attorney, and an advance health directive. Make sure your family know where those documents are.
And I will add, we are going to be bringing an online will service to Starts at 60 in the next 24 hours.
Wow.
Fabulous.
Who wants to go next? Robert, you?
No, Nick, you go first.
Okay. Look, I think I sort of alluded to it. Make sure you get in touch with Centrelink as soon as you can, just to make sure that those records are absolutely spot on, because you could be missing out on quite a bit. If your portfolio's dropped $100,000 and your asset tested, that's another $300 a fortnight, folks. $300 a fortnight. And it'll only change when you tell them. They don't backdate these things. It's from the date you notify them. So get that in order. The other thing, can you take the lessons learned from this session and pass it on to your kids and grandkids? You're worried about it. They're just as worried. Talk about, you know, what we talked about, holding those super funds. Don't take the money out unless you really need it. Those are really important messages. And even though you might not be able to see them physically, share some of the lessons from today, because it's really important that no one's panicked out there. It's not a time to get spooked.
Rob, what should we do?
From my point of view, it's make sure that you can transact out there. If you're not on online banking, get onto online banking. Get your contactless technology up and running. One of the things that'll worry most people is if they can't go out and use their cash. Make sure you've got those options. So for you and also for your parents, anybody who doesn't, take them through how to get onto online banking. Take them through how to actually, transact online. I'll use contactless payments just to take that whole pressure of how am I going to pay for things off.
Can I add to that just in closing? It's really important to me that people look at their parents who are people who are 60 often have older relatives. Now, are they using a device at all at the moment? Please be aware people who have had loved ones locked down in aged care without a device are now struggling to communicate with them. They're having all sorts of challenging times, not being able to relate with people in dementia care. And so if you can do something to get a device into their hands with very simple application on it, you've got more possibility. And if you need the power of attorneys on their bank accounts or things to be set up for older relatives, or simply to have a discussion and a plan. A lot of this for everyone at the moment is about having a discussion and a plan if you don't have things set up already. So I will now move to my slide deck. So we're going to wave goodbye to our fabulous panelists.
Thumbs up.
See everyone.
What an absolutely fantastic event you have this, guys, and to our audience out there. There's still more than 900 people on live with us, and this will go live on Facebook and YouTube over the next hour or so as we bring that into the internet for everybody as well. And that means you can share it with your loved ones and other people in the community. So we greatly appreciate your involvement today. I'm just going to drop my little slides in that you can now see, hopefully, or you will be able to. Our wonderful speakers. So thank you very much for your help today. You'll be able to find each of these three gentlemen online, and each of them contribute to Starts at 60. So we will have more questions answered, and we will harass them today to answer as many of the questions that you have sent us that we can. And we will just keep bringing you answers on our site over the next month ahead. And so no, Starts at 60 has a lot of things that you can subscribe for, and we're very focused on adapting in this time to make sure that we are what you need us to be over the next period. These are the emailers you can subscribe for. They are all curated by a very experienced team, and experts like Nick and Rob and Noel all contribute to those very regularly. And we'll be hosting more virtual events in coming weeks, which we'll promote through the email and Facebook pages. If you're looking for a new subscription, we've just launched the Starts at 60 Essentials, which you can access through our homepage. This is designed to bring you what you need to know as COVID unfolds. We'll bring you some great help along the way, and people are really banding together of over 60s, recognizing how much you're going to need in social connection, as well as all of these wonderful discussions about finance and health as this situation plays out. We're hoping it will be nothing as catastrophic as some of the media is saying, but we're going to stay sensible and bring you really, really sensible insights all the way through. No melodrama, no craziness, just real informed discussion as it unfolds. So this is where you will find the place to sign up on Starts at 60 if you haven't already. A big thank you must go to Westpac. We mobilised this 2 days ago, and it's the first time we've done a live event, and it's bigger than many live events that I've seen online. So well done. We hit the caps of the room that we booked online, and Westpac have been an amazing supporter for this. They want you to take steps now to make sure your banking is secure for the period ahead. And it's their support that has brought this discussion to life today. So thank you. I have been, and I'll just bring myself back. You can see me and our wonderful panelists now. I have been your host. My name is and Starts at 60 is here to support you. If you would like to chat with other people, come along and join us on our website and our Facebook page. There's always plenty of people to talk to. And I look forward to seeing you again soon. Thank you for joining us. We're here to help over 60s help themselves through this phase, and that's a big sense of purpose for us. We've been supporting and entertaining over 60s for 7 years online, and have the largest community of over 60s in Australia and New Zealand. Nearly 1.4 million people join us every month to be informed, entertained and engaged, and we do this through events, community and content all over the country, all focused on helping over 60s learn and grow. So that's really important to us. Like everybody right now, we are learning to cope in a new economy and environment as well. And we're looking to adapt our offerings and thinking of new ways to support over 60s through this journey. So expect to see more virtual events and new initiatives launching in the coming weeks. And if you haven't signed up for Starts at 60 yet, please ensure you do so immediately so we can keep you abreast of the changes. There's a sign up box on the home screen at startsat60.com. This is a little picture of our meetups all over the country that have been postponed while COVID is taking taking its challenges through everybody. But that's a sign of just how strong the sense of community is here. And what we can do online over this phase will be amazing. I'm quite sure of it. So put your hands up if you've been to a Starts at 60 meetup on the first Tuesday of the month all around the country, and give me a wave, because that's something really special that we do. And it's run by volunteers all over the country. There's about 100 meetups on the first Tuesday of every month.